All right, let's take a look at we had a question about trend versus chop. The algo does a really good job of telling us when the market is trending and when it's chopping. So we have two trend filters built into this thing. So we have and it's actually a multiple of 10 different indicators that come together at once. What we have is an outer zone. This outer zone, you see these green parallel dots. So when you see these green parallel dots, they're parallel. They run parallel to each other. If they're green, if they're green, then the market's in an uptrend here. All right. So what we did is we tested this over the past 30 years on the S&P and found this zone to reject price. It's the best zone. You can see how yesterday it came down to the zone, got out of the zone, came down. It's a good V bottom here. Really nice V bottom at 1240 yesterday for that big push up. Another great V bottom with trend there also. These are also great liquidity grab trades with the liquidity grab trader at those levels. So the easiest way to look at it is on this outer zone is known to reject price on the S&P and other markets. So that's one part of the equation on determining trend. The second part would be the inner dots. The inner dots, you see them as little dots that come up in the market. Those are what are the Simrenko dots. So those are proprietary Simrenko dots. We created our own bar type. So when they are green also, you have a hard trend. So that's how you determine chop versus trend. You'll notice on chop, these two will not agree, these two trend filters. So I call it a dual trend filter or a double trend filter for a reason. If you're in an uptrend, it'll be green, green. I'm just getting this down so you can see it better. If you're in an uptrend like this, it'll be green, green. So Jim had a question in the room that he typed in that how can you stay out of chop? Well, this is one way how you try to avoid chop is that you look to stay on the side of the trend filter. So we just did a video on how to look for the liquidity grabs in between. You can play our previous video when I marked this up a few days ago. But the easiest way to look from trend to chop is that if you are green, red, see now they don't agree. My dots are green. My zone is red. So this area is now chopped. So if you want resumption of trend and to get out of a chop market and put yourself into buy retracements on these V bottoms, these yellow trigger entries like this, then you'd wait for it to turn green, green. So you go from a chop mode, which is green, red, into green, green trend, and then it will stay trend until we have an opposite color again. So you can see how our zones reject price, reject price, reject price. So the zones are very, very accurate over the past 30 years. This is the best zone for us to look for a rejection of price. Then if you turn red, green, now they do not agree. This is the chop area where you're going to look for a trend change. And then now this morning we're red, red. So what are we doing? We're looking to sell V tops. This is an entry this morning. Yesterday into the close, sorry. There's a V top. And then we're coming into this morning's trading. We're into a V top and we're into another V top as we speak. But now we're red, red. So as long as you don't close two candles outside of our outer zone, if you close two candles outside of our outer zone, then you get what's called a failure trade. We turn right back into trend the other direction. So that's the best way to see when you are chopping or trending. You can put it up on this chart too that shows liquidity grabs. It's easy to see when you're trending versus chop. So You can see we're green all the way up. So you notice that V bottom here, V bottom buy. So these V bottom, so on, etc. are going with trend because we're green or we're red. And that's how you can use the Liquidity Grab Trader. If you want to use it as an order management system off of these smaller Rincos, you want to stick on the side of the overall push. So the push is down right now. Now, we are red, so that tells us the dual trend filter is going lower as of this morning. Now, we do have a larger Rinco size above us. We use this just to gauge where they're trying to buy these order blocks or sell these order blocks on a pullback. If you notice, we've been in a hard uptrend since December 2nd. So all week, they've been liquidity grab buying. These big dips are distortion in price. These are stop hunts. So what's nice is when you match up this trade, this longer Rinco size is moving higher. It's all green liquidity grab buys. You match it up with the smaller Rinco size, which it did here when they're all green. You got total trend direction. These are great V bottoms at 2 o'clock yesterday, at 1:40 yesterday, and so on at 3:22. So you have total alignment, and that is the that's when you're involving the larger Rinco size with the smaller trend chart as far as that goes. So that's the best way to do it. On as far as that goes, yeah, Aaron. Hey, good morning. So we do got some news coming out, and so we'll see these pockets in the market. There's our big pockets in the market on market profile. We like to use previous market profile to see where the pockets are. If we break below, we're in a downtrend right now. If it continues, if we break below 60.80, our target on the S&P is going to be 60.72. That's an 8 S&P point hit. And then from there, we got a big gap in the market. We use 2 to 4 hour rotating profiles. A 60.72 all the way down to 60.71, another 12-point hit in the market. So we got some big gaps in the market to fill today. Once news is released, you want to let it settle down. Now, if you're using the Liquidity Grab Trader, you want to turn it off now, wait till 3 minutes after news, and then you can start stalking trades after 3 minutes after news post because it's going to get volatile in a second.